Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello and welcome to a special crossover of the Smart Property Investment Show and a real estate business podcast. I'm Emilie Lauer, journalist here at Momentum Media, and today we are doing a special property market update with Dr Diaswati Mardiasmo, chief economist at PRD. Asti, welcome to the studio.
Hello. Thank you so much for having me, and in studio as well.
Yeah, it's your first time coming here, yeah?
I know it's my first time coming to the studio, even though I think I've been a guest a few times, but definitely feels really different in studio.
Yeah. And look, they're pretty nice studio, I have to say.
It is. This is awesome.
Well, today we are coming together for a special property market update, and that is for the first half of 2025. So you guys at PRD, you used to run a report once a year. That has changed a little bit, and now you are going to run it twice. So one for the first half of 2025 and one for the second half of 2025. And that's the Australia Economic Property Report.
Yes.
So why going from one report a year to two reports per year?
So this is one of those like aha moments, right? Because the Australia Economic Property Report, it's in its like 15, we've done it for 15 editions as a book, as like a 22, 23, sometimes even 25 pages of text and graphs and all amazing sort of key insights. But what we found is that with the way that customers are right now, not everyone has the time to read 22 pages, even when you have like takeaway boxes or takeaway dot points or anything like that, to make it easier to read. Just the thought of that you have to read a whole 25-page document and you have to actually go through it can be quite daunting and can be, basically quite exhausting, really. And so we thought, you know what, let's move with the times. People love information in short, sharp format. So instead of a book, it's now in like a PowerPoint, PDF, sort of like flick through, sort of like ebook sort of version. And you're right, we used to do it once a year. And the reason why we did do it once a year was because it used to take me like a whole month to write and gather all of the data and, all the writing process and everything. But then we found that it became static because we could only do it once a year. And of course, data is not a once a year thing. Like a lot of data points are updated every quarter, for example. Like the unemployment rate comes out today. And that is every quarter. The RBA, when they do any of their meetings, is not once a year. There's 8 meetings in a year. The property market doesn't move or have a price change just once a year. And then so we found that, even there was so much being put into the report, but then the staticness of the report made the report quite redundant very easily and quickly. And so that's why we've moved to like, twice a year with more succinct information, bullet points, Emily.
Everyone loves a good bullet point, yeah?
Not like long, big paragraphs, but like bullet points of, key findings. And so I think that actually does make it more digestible. And infographics.
Yeah, and I guess you're right. I think the property market changes quite quickly. Then if you want to keep up with where you are going to invest next or where you're going to advise your clients next, if you're a buyer's agent or a real estate agent, you need to keep up with the pace. So you need to have like the info quite updated all the time.
It definitely is. And I think having it in, first half and second half, it's always a good sort of timeline because, everyone gets busy, throughout that middle of the year. It's kind of like what's happened in the first half of the year and then the second half of the year and how you can prepare for the next year. Whereas just having it once meant that you might miss out on a few key trends. And especially this year, Emily, because this year is federal election year.
Yeah, and I guess that's going to change the market quite a lot.
We've got federal election, and the one thing that everyone talks about federal election, of course, is what policies they're going to bring in and how that's going to impact the market. And then a lot of people still ask me about, well, is everything that was in federal budget 2024, are they going to be brought forward to 2025 onwards? And the answer is it's uncertain, because it is possible that whoever becomes our next federal government, they will hand down their own federal budget 2025, but then that might be a completely different focus than federal budget 2024.
Yeah, and I guess no one has the answer to that until we know who's next in line as Prime Minister, yeah?
Exactly.
Let's have a little chat about the report. What is some of the biggest takeaway?
So the biggest takeaway, I would say, is where we are at in the market in terms of price trends and price growth. I always try to break it down to three key things, right? The first one is where we're at right now. And where we're at right now from an economic perspective is that we're in this very sort of like resilient but cautious economy. So what that means is that we're seeing growth in a lot of things, like our GDP is growing but slower. Our wage growth is still growing but slower than before. So we're seeing growth in most of the economic indicators. Our employment rate is still quite low. It's growing, but it's still quite low that we can still say that it's a tight labor market. So we're seeing growth in a lot of different pockets, a lot of different key indicators, but it's steady growth. It's like, a little bit of that cautiousness still coming through. So I always break it down to where we're at right now in terms of the economy, and then in terms of the property market, like prices, growth, which capital city is performing, which one is still sort of like recovering, what's happening in the rental market, it's still high. So we've got that where we're at now sort of situation. The second part of the report is very much so, Australia is a lot of the times we have this micro view, right? Of like, we're here, we love where we are, but then how do we compare with other countries? What's going on in the global economy? What's happening in other countries' policies? How are they faring when it comes to their own markets? I get questions a lot about our construction industry, our housing supply, and whether are we the only ones who's lagging when it comes to our housing supply. And the answer is we're not. There's a lot of other countries who are still lagging in their housing supply and the amount of residential construction that they're bringing onwards.
So how do we compare internationally? Are we doing better than others, worse than others? Are we in the middle?
So we are literally because we look at like all the different countries, right? Whether it's US, UK, France, Russia, Japan, Germany, all of the countries. We sit literally smack bang in the middle.
Okay.
The good news is, out of a lot of those countries, we are one of the very few that has seen a slight increase in our residential construction. And when I say residential construction, I'm talking about new builds.
Yeah.
So like new residential construction, things that has been approved, that is on the books to actually come out of the ground, right? So we're actually number 3 in the whole world.
For new builds.
For new builds. Now, number 1, if you want to know.
Yeah, I want to know. Yeah, definitely.
You want to know
who
number 1 is. Okay, number 1 is New Zealand.
Okay, just the neighbors?
The
Okay.
neighbors. Number 2 is Canada.
Interesting.
We're number 3.
So what are they doing better than us?
So for them, it's more about unlocking the land.
Okay.
So the issue that we have had a lot, like there's almost like a worldwide issue of trade shortages and construction costs and, you know, the availability of timber and steel and metal and all of the raw materials, right? But the one thing that they're doing better than us is unlocking their land. And the one thing that many developers come to me about is that they have great ideas where they want to build and things like that, but they can't find the developable land. We have a lot of land, but in terms of whether they're developable or not, in terms of whether the zoning is flexible or not, how quickly can we overturn a particular zoning so that we can then build some residential items on it? So that's what they're doing better than us.
Quite
is
interesting, yeah.
Yeah.
It's very interesting because you don't think, when it comes to Australia, you think, oh my God, Australia is so big. There's plenty of lands available. We know that land prices have increased by over 7%.
Yes.
So everyone talks about the cost of building new.
Yes.
And, you know, construction costs rising. But you don't think that there are no buildable lands? Like, it's very interesting.
It is. And for me, because like I travel quite a bit and I have a lot of international visitors, right? As most of listeners probably do also, and a lot of them come from like land packed, very high density, large amount of people in a small capita sort of like place. We're not that dense, to be honest with you, compared to some of the other countries, compared to places like Indonesia or India or China or,
Yeah, look, I lived in Tokyo for a year.
or Tokyo
is packed, yeah.
And then like I get all these visitors and they say to me, what about that plot of land? What about that one over there? What about that one over there? But the issue is that sometimes we don't realize that that particular land might have heritage listed on it, or it might be crown land, so for the Commonwealth Crown, or it could be that it has been zoned for industrial only, or it's been zoned for mixed use but specifically for office and industrial. And so then to overturn some of that can take a long time with multiple permits, multiple application fees, multiple paperwork, and that's where our clog is.
It's very interesting, definitely interesting. Now, the report also looked at the different capital cities in Australia.
Yes.
What is the main difference between the capital cities? Is there one that is, like the next hotspot of the market, while there one that is like, yeah, you should stay away from it?
I don't know if I should be telling people to stay away from a capital city, Emily.
Okay, let me rephrase.
Okay.
One, all right, Dennis, let's rephrase this one. So the report also looked at different capital cities. Is there one capital city or multiple capital city that do better than others?
So this is the part that's really interesting to me, because when someone asks me which capital city is doing better, I always ask them better in terms of what, right? Because if we look at better in terms of price growth, then you have Brisbane and Adelaide being like your number, top capital cities where prices are just going like crazy still. It's still tracking on. Like there's quite a lot of suburbs now in Adelaide that is breaking the $1 million, median price. And I remember like pre-COVID, 10 years ago, everyone talks of Adelaide as one of the more affordable capital cities. Same with Brisbane. Now Brisbane prices is sometimes higher than Melbourne, you know. So when we talk about better, I always go, if it's from a price growth perspective, then you've got Brisbane and you've got Adelaide. But when it comes to better from an affordability perspective, then Melbourne is your answer, because in terms of all of the capital cities, there are more still in declining phase or still in recovery phase suburbs in Melbourne compared to any other capital city across Australia. Hobart is another hotspot, I would say, just because their market have declined slightly, and it does take some time to recover back in Hobart as well. So you've got that option. Even though I do know that first home buyers in Hobart will say, oh my God, it's getting so expensive in Hobart, which is absolutely true. But if you actually compare it from an entry price perspective, dollar figure to other capital cities, it is still the most affordable one at the moment.
So we touched a little bit on that earlier on as one of the takeaway of the report, and it's the construction part of the report, the new builds. Look, there's been an increase in tradies and construction peak bodies warning about the rising cost of construction for new dwellings, which is slowing the new builds. So what is the latest new dwelling cost trend across capital cities that you guys have found in the report, and how is that impacting supply?
So this is really interesting because we're seeing different speeds. So Brisbane and Perth new dwelling cost inflation is actually increasing at the moment, which means that it is more expensive for someone to build a new home, whether it's a new dwelling as in like a standalone house, or whether it's a townhouse, whether it's unit apartment. It's currently more expensive to build in Brisbane and in Perth. Whereas in Sydney and in Melbourne, as well as Adelaide and Hobart, it has actually declined slightly. So that means it is now a little bit more affordable to actually build a new dwelling in Sydney and Melbourne in particular.
I think it's very interesting because there's been a report that came out not long ago that said that almost half of the cost of a Sydney new dwelling is within taxes.
It is. It is. It is literally it's not just in Sydney. It's in most, I would almost wager all capital cities is in taxes, right? Because it works kind of like this, Emily. Every single local council, that's where the power lies in terms of approving a particular new build, right? Like if you are about to build in, the council of Newcastle or the council of Macquarie or the council of Gold Coast or Sunshine Coast or whatever, it's the local council that can approve your application. And each local council have a different set of rules, regulation, application processes, taxes, and whether it's infrastructure costs, infrastructure charges, a particular permit, a particular other type of permit that you have to do. Sometimes you have to go for 3 permits in a particular local council. Sometimes it's 5 types of different kinds of permits. There's different parking regulations, there's different height regulations. And not only that, afterwards you have to work with like your utilities provider to make sure there's water, there's electricity, and all of that adds in terms of costs.
Yeah, it's a journey to build.
It is. I have had, I'm not a builder, of course. I'm not a developer as either. But on a personal level, I have had a hand in actually subdividing, a big block of land into 2 and then putting on a granny flat in the front part of the land and then building a brand new house in the back of the land. And just going, it's it's nothing compared to the other builders, developers. Like, I literally take my hat off and salute everybody who is in the building industry because of this. Because, like, the amount of emails and work and, like, the application processes, suddenly there's a turning parking cost that I have to do and all this kind of thing. Like, it's just mind-blowing.
Yeah, a lot of red tape.
Yeah.
Yeah.
And at the moment, like, whenever I talk to my developer friends, it's almost you have these taxes and these other different costs in all different manners, whether it's from the government itself, but then also the banking industry in terms of how they structure business loans, fees, and how they can be in different types of products. And some of them, a lot of developers now like to charge on a stage by stage process to make sure that they're covering their cost. But a lot of banking products doesn't do that. So then there's a lot of other fees that has to be done to recreate that banking structure, right? So it's all kind of like, I don't know, a perfect storm to make the perfect house, I suppose.
Here we go. What a good analogy. Talking about house, because what's important for some of our listeners is house prices,
Yeah.
And how much does your house price grow over the years or the months? We talked a little bit about it. It's a slow growth, but it's a steady growth.
Yes.
Adelaide and Brisbane are doing better than others.
Yes.
How are house prices forecasted to grow in the future? Yeah.
So, again, I feel like I really would love to have, it's that perfect storm again. But at the same time, I would really love to have a crystal ball so I can, like, literally tell everyone it's going to grow by an X amount percent, But the perfect storm here is, I will break it down to, like, 3 key ingredients. Yeah. The first one is obviously supply. And what we're seeing in a lot of capital cities is it's units that are coming on board, right? Very little amount of houses, right? And so when we already have an undersupply of houses, and this is happening more so in Brisbane, in Adelaide, Hobart, Perth as well, to a certain extent, Sydney and Melbourne, but, it's almost, like the amount of houses that are coming to their capital cities is in the thousands, whereas when it comes to Brisbane, Adelaide, Perth, it's in the hundreds. Oh. So, that kind of gives you a bit of a clue as to, like, where the house builds are. And because the house builds makes up probably only about 10% of the supply coming. Like in capital cities like Brisbane, Sydney and Adelaide, for example, the amount of units that are coming are in the tens and thousands. Whereas the amount of houses are either in the small 1-digit thousand or in the hundreds. So it makes up about 10% of supply. And because of that, house prices is forecasted to keep on growing, just from a supply perspective. Whereas unit prices is forecasted to still keep on growing at a slower pace. So most of it is going to be stagnated, a bit stable, especially in massive capital cities like Sydney and Melbourne. In Brisbane, it will still keep on growing because those who cannot afford houses or can't find houses, they then go to units, right? Yeah. So, you kind of push everything up in that sense. So from a supply perspective, it's showing that, yay, like price growth, both for houses and unit. But wait a minute. We've got the consumer sentiment, where the people are feeling it is now the time to buy a dwelling or not. And that time to buy a dwelling index is something that we very much so look at, because that's people's sentiment of, like, yep, I'm going to buy now, or I'm going to hold, or I'm going to just stay stable for now. And if something good comes, then yes, I'll act on it. But if not, then I won't. And that time to buy a dwelling index, that buyer sentiment, really covers things like how they're feeling about the economy, how they're feeling about their finances. And at the moment, yeah, it's great. It's an increase in every single state. Time to buy dwelling index is increasing. So we've got a good property demand level.
And I
at the
guess
moment.
the RBA rate cut is also at play there. Like,
And
if
that's the last key ingredient, right? Is like what's happening to people's borrowing power, the RBA cash rate, and also the interest rate. Because we have to remember that no matter what the RBA does, there's no law that says that the banks have to follow. So it's also then about, how much they can borrow and how much do they have to pay back. So that's kind of like almost your 3 key ingredients to give you a bit of a clue as to what's going to happen to property growth. And that's why we've titled this Steady On. Because, from a supply perspective, demand, supply, it works to a level where we're seeing price growth. And yes, demand is up at the moment, but that demand can slow down depending on what's happening in the economy, what's happening to cash rate cuts or cash rate increases. Who knows, Emily?
please no increase.
Who knows? And also right now, we're in this kind of place where more than ever, any geopolitical instabilities, any geopolitical unrest, risk, all of that is impacting us more and more.
Yeah, it reminds us that it's not only like buying a property, but everything that is around it that is actually playing the property market.
Exactly. Like, the other day someone is asking me, well, okay, so maybe the stock market has, I don't like the word crash, right? Because it like in terms of like in my head, it just gives me like this illustration of something catastrophic that has happened, The stock market has dipped slightly. How does that and that's the world stock market. How does that impact someone, say, in regional New South Wales or in regional Victoria and the house prices there? But what we don't realize is that provides a multiplier effect, because you could be working for a subsidiary company of one of the companies whose stock has dipped. And that can really impact your own finances and therefore your sentiment to the property market. Or you don't realize it, but you might be the subsidiary of another company that provides timber and metal. And that can put a damper in the construction industry.
Yeah, everything's linked at the end of the day, yeah. Let's talk a little bit about investors. What does the market look like for investors at the moment? And is it a good time to buy maybe your next property and build up that portfolio?
I'm very happy to say that investor finance have increased by 22%.
Oh, wow, that's massive.
Which is in the past 12 months, which is amazing. It is massive, right? Because we had such a decline when the cash rate hikes happened and our rental markets really tightened up. And you can't blame investors because you have to make sure that the investment is financially viable. And investors, like I'm an investor myself, and I have to, there's 5 costs to me, 5 or 6. Once you put in body corporate insurance and everything, not just the mortgage payment, versus one income, which is rental. So investor finance have increased by 22% across the board, right? So for the whole aggregate Australia. And we're seeing that translate slightly in rentals. So the CPI, or the Customer Price Index, inflation for rent have declined in the past 3 months or so. It's still really high. It's much higher than pre-COVID, but it has declined. And the reason for that is because we've had more investors coming back. So we've had more supply. So investor finance have increased. The average amount that most Australians put when it comes to their investment properties have increased as well by about 7.8% as an average. So the amount of debt that investors have had to put up or have to commit to have also increased. And that's simply because of property prices and the way that they are right now, right? Property prices. In terms of whether or not it's a good time to invest, and I love this question because, you kind of go through up and down when it comes to investment, right? Now I would say, is that ideal time where if you are an investor, you can benefit from better borrowing power and hopefully slightly lower mortgage repayments. Vacancy rates across the nation is still anywhere between, on an average of 1.3, 1.5%. So that's still a tight market. And especially in regional areas, some of the regional areas still have a vacancy rate of 0.4, 0.6, 0.2%, So in one side, yes, the amount that you have to commit have increased. But then when it comes to the rental yield, when it comes to the vacancy rates, the rental yield is still holding up. The vacancy rate is still very tight. A lot of the costs have kind of stabilized now. I felt like we went through this frenzy where everything just went up. Insurance went up, rates went up, water went up, everything went up at the same time. And now we've had this period of previously more than 12 months of stable interest rate, which meant that people could, budget better, forecast their costs better, and you're not always hit by an increase of costs on a month-by-month basis. So we're coming out of the other end of that now, where we're no longer seeing that, and it's giving investors more confidence. So yes, you have to commit a little bit higher just because of where the property market is, but investor confidence have increased as well.
Which is good to hear, I guess. I feel like we've turned the new leaf in terms of prices, and prices are starting to stabilize and get lower.
Yes.
Now, when it comes to investing, which states is? Let's get to the details.
You're
the
like,
nitty-gritty.
I just want to know where.
I think it's investors. They're always looking for the next hotspots. Yeah,
Of course.
And look, it's always data driven. To make sure you have a good investment. We talked about tight vacancy rates, high rental yields. House prices and unit prices are going up everywhere. But when it comes to investing, is Brisbane and Adelaide and Perth still the hotspots?
Okay, so delving into the data.
Yay!
Hashtag data nerds. You know how I said that on average, investors are committing to 7.8%
Yes.
higher when it comes to debt? If you want to try and minimize that, Victoria is the state to go to. So yes, you do have to commit to a slightly higher debt level in Victoria, but only by 0.8%. So if you compare that to the 7.8% increase in the amount of debt that you have to carry in Melbourne and in Victoria, more so as a whole, is 0.8%. That makes it quite viable from that, debt level sort of growth perspective, right? So this is the part where it depends on how you look at it. From a growth perspective, you've got Victoria. From a dollar amount perspective, the lowest dollar amount that investors are committing to is in WA.
Interesting.
So, they have grown quite a bit in terms of their, percentage of growth that people have to commit to. Double digits, in fact. But in terms of the actual dollar amount, the most affordable one is in WA.
I would have thought Northern Territory, Darwin would be more affordable than WA.
It's second close.
All right. I wasn't
second
far.
close. You're not far. It's second close. It's second close. But Darwin has had a bit of a spurt in the past 3 months or so. We've had like a lot of mining have like come back into Northern Territory as well, which is what's happening. But in terms of the actual dollar amount, WA has been our finding when it comes to how much you actually have to commit to. So on average, the Australian average is about 680,000, anywhere between 680 to 700. Whereas in WA, it's still around that 460, 470 when it comes to investor commitments. So it's still, it has grown leaps and bounds, but it's definitely still one of the more affordable ones that we've seen.
So look, we've been through the reports, I see. We've done the nitty-gritty details. I think what's interesting also is what trend does that report tell us about what can happen, in the second half of 2025. So look, following the data, what are some of the trend that we can expect?
So I will try and put on my, look at the crystal ball sort of thing. A question that I get asked a lot is, are we going to get more cash rate cuts?
Yeah, okay. And this one, I think everyone wants to know the answer.
Right? That's the one that I get, because I think we've just talked before about how that has quite a lot of drive in terms of many things, because, that impacts business borrowing for construction, for developers, builders, etc. It also impacts people's feelings and sentiment on their own finances. So, and that kind of plays with demand and supply. So the official word, of course, is that no one knows what's going to happen, right? But we do have some, I'd say, flags to look at. The first flag is, of course, our inflation rate. Now, our inflation rate at the moment is probably one of the healthiest ones that we've seen. It's at 2.5%. The RBA likes it to be between 2 to 3%. Smack bang in the middle, cash rate cut, no brainer, right? The key is, are we going to stay between 2 and 3%? Now, some of the worry, I suppose, or some of the concern that the RBA does have is, what is our inflation rate going to look like when we take away the cost of living rebates? Because the cost of living rebates actually kind of puts a bit of a blanket over the inflation rate, because it doesn't really tell you the true cost of things. Good example, I normally pay about like 400 odd every quarter for my electricity. Thanks to the combination between the Queensland state rebate and the federal government one, for a couple of quarters, my electricity bill was zero.
Oh, wow.
So I went, okay, I love this for me, but that means that from my household, I'm reporting in quotation mark that my electricity bill is zero, when really it's not, right? It's about $800 in total for those 2 quarters. And so the worry is when we take away all of the cost of living rebates, whether it's electricity, whether it's the Commonwealth rent assistance, whether it's any other welfare, Centrelink payments, rebates that might be coming to an end, especially because there's a change in government, right? How is that going to all impact the inflation rate? And so the worry is that if we go over that 3%, the latest from the RBA is that they're even forecasting we might go up to 4%. And so, it's kind of like that question of, are we going to stay within the 2 to 3? Are we going to go slightly over it, or are we going to go way above it?
Which, look, might be like a silly question. I'm not sure. But would the RBA up the inflations again, or now that it is cut, it's cut and we cannot gain again those 0.25 percentage points?
I cannot guarantee that. I can't. There has been times where the RBA has had to do what it has to do and taken back, so to speak, a cash rate cut. At the moment, the official line is that it's still a restrictive monetary policy, in the sense that, yes, there has been a cash rate cut because of where the inflation rate is, where the GDP growth is, which is slower than expected. Many people don't know that that's actually by design. They actually wanted a slower GDP growth because GDP is our demand, right? And demand has been so high since post-COVID that it caused inflation. So a slower demand actually kind of pulls inflation back. And so, it's still a restrictive policy in the sense that they've given us a little bit because we've reached it, but it doesn't mean that it's a guaranteed it's going to be a cut. Now, the latest document does say that if, and this is a big, massive if, everybody. I have to cover myself here.
Very much if.
This is like if, big, massive capital letters. If we stay within that 2.5 for the next few months, the next, second half, then the latest SMP does say that there's a possibility for 2 more cash rate cut this year and another one in mid or the beginning of next year. But there's a lot of ifs for that to happen, right? There's a lot of ifs, and particularly anything that will impact the inflation rate. And the inflation rate is quite wide in terms of the basket of goods. It can be rent, it can be education, it can be entertainment and holidays, it can be, electricity and all the other fuel and things like that. It can even be as simple as hospital bills and, health department. And there's a whole lot of things when it comes to the inflation rate.
And I guess that is a conversation we're going to keep on having over the next couple of months, if it's not for the rest of the year.
I think so. There is one thing that I do want to debunk, though. Many people have come to me and say, oh, we're about to have an election.
Yeah, that was going to be my next question. How the next election is going to influence the property market and what's going to happen in the second half?
So the first one that I want to set the record straight, because a lot of people ask me this, is like, oh, okay, so we're going to have an election. Does that mean that the RBA is going to keep everything stable for the election? The answer is not always.
Okay.
All right. The RBA is separate to the federal government. It's not because the federal government has done this, therefore the RBA does that. Or, there's going to be an election happening, therefore we're going to keep everything stable. That's not the case. They're very much so data driven in terms of inflation rate, in terms of all of the different things in the chart packs, in terms of GDP growth, unemployment, all of that kind of stuff. So it's not just because there's going to be an election that they're going to hold the cash rate steady. That's the first thing that I wanted to set the record straight. The second one is that throughout election time, historically, this is the part where many buyers pause. There's usually about 6 to 7 weeks of uncertainty, especially for first home buyers. Because first home buyers, there's so many first home buyers that have come to me and asked, is the help to buy scheme coming? When can we start applying for the help to buy scheme? Because obviously it was introduced, announced, etc. by the current government, but there's no official date yet as to when it's happening, what are the details. They're still going through all of the governance mechanism for it, right? Will the next government pick it up? We don't know. So, will the next government also pick up, all the current first home grants, or are they going to change it? Because right now we have two parties where one is definitely for the Help to Buy scheme, and the other one is more about being able to access your super early so that it can help you purchase a house. So what's going to happen? Are we going right? Are we going left? And so because of that, we do have an almost like that inactive, cautious sort of period where first home buyers kind of go, do I wait? Or do I take advantage of the fact that this is probably one of the more quieter periods in the property market in terms of other first home buyers and actually put my ring in the hat? So traditionally speaking, historically speaking, whenever there has been a federal election, we do see a slowdown in the property market. We do see people kind of like going, do I want to wait for the next one just in case there might be new tax breaks that's going to give me a little bit more money to play around with? Or, if there's going to be any other incentives that I'm going to be able to access, So in terms of where the property market is and how it's going to impact, it will impact that buyer sentiment. Right now, time to buy the dwelling index is up for every single state, right? In the next 2 months, maybe 3 months, I wouldn't be surprised if we see that taper off slightly, right? So,
Yeah, it's I feel like it's a very uncertain year with the election coming in, but I think it makes it also very interesting from a property buyer's perspective. Asti, thank you so much for joining us today. That's all we have time. Very insightful.
Thank you.
And a very good market update for the first half of 2025. That was a special crossover pod of the Smart Property Investment Show and a Real Estate Business podcast. We will be back in just a few days. In the meantime, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.